Okay guys, in this episode we're going to talk about the pre-approval process and how to get pre-approved for a home loan. This is the stuff your mama didn't tell you about, this is the stuff your banker didn't tell you about, and it's also what your friends didn't tell you about. So if you guys are ready, we'll go ahead and get started. There's a lot of things to think about when you're buying real estate, and this is the first place to start, is when you're buying a home, is getting pre-approved. You ready? Okay, so why do you want to get pre-approved? First off, you want to buy something, you want to buy a home, you want to get a mortgage for it, and you want to make sure that you're getting the best deal. Problem is, if you walk into your bank, you've probably been dealing with them for a while. It doesn't mean that you're necessarily going to get approved for what you're looking for, even if your credit is good. It doesn't necessarily mean just because you've had a banking relationship with them that you're going to be getting the best rates and that sort of thing. So I just want you to know that this is what we do. We do it on a daily, and I want to make sure that you're avoiding these pitfalls. So pre-approval process, what they're going to want to know, the bank is going to know, whoever you go to, is your debt to income ratio. Now what that means is how much money you have coming in and how much money you have going out. Everything to a bank is a risk, okay? So they're looking at the risk. So the least risk that you will give a bank, the better your rate will be, and also the easier pre-approval you'll have. So like if you are looking at buying this home and you're gonna live in it as your primary residence, that's less risk. If you're buying it as your secondary residence or an investment, that's more risk. So it may not be the bank that you think that you're going to start with, and you may end up with. Now, if you're living in the home yourself, pretty much 3% down, you can get first time. There's lots of programs out there, not just first time home buyers, but lots of programs where you can get, you'll have equity in the home. And there's less risk there. Everybody has to live somewhere. The more risk comes when you're an investor and you're looking for a property and it's a true second home, or if it's for a vacation rental and you're going to put people in it. Usually they're going to want 20-25% down for any bank to feel comfortable about that, and you're not necessarily going to get that loan through your hometown bank. Trust me, the deals that I see that fall apart here anyway, in Myrtle Beach, South Carolina, are the ones that usually, hey, I know my friend's a lender, he can help me out, I've been dealing with him. Those are the ones that are going to hose you. I've seen it before. I know you're not going to believe me, but when it happens, you're going to say, Jerry, you were right, you told me so. The deals that fall apart, and why is that? Because most of those banks, when they're dealing with a loan from outside their area, a different state and all that sort of thing, oh my gosh, that property's at the beach, oh my gosh, you're not going to live in it, oh my gosh, you're talking about a second home, or you're going to put other people, they're going to be renters in there. Everything is a risk to a bank, like I just said before. You want to have the least amount of risks for a bank, and they'll give you a better rate. So I said the one thing is debt to income ratio. They're going to look at that. I said about the down payment. They're going to look at that. That's less risk. The more skin you have in the game, obviously, the less risky it is for the bank. So the other thing is your credit scores. We see people that have credit scores all over the place. It doesn't mean just because you have a low credit score that you can't get a loan, because you can. But it is easier to get a credit score if you have good credit. And people say, I want rent to own and all that stuff. There's really no such thing. You're going to get hosed if you're looking for that. The deal of the decade, or if it's too good to be true, it's too good to be true. So credit scores, what do you need? If you got a 700, you're doing good. If you got a 500, not so good, but there are programs that can get you into a house. You may pay a little bit more, but there are programs that can work for you. So, they're going to look at your investments. If you have property somewhere else, if you have assets, do you have any savings? Okay, so if you do have some savings after you've already put the money down and that sort of thing, that's going to make more sense to a bank, because look, you're not as risky. Everything is a risk. Remember what I said. So the less risky you look to a bank, the better you are. If you have a 401k, obviously you're not going to tap that, but they're looking for stability in your life. If you've got good credit, you got a little bit of money put away, and you've been thinking about doing this for a while, it's not the whim of the week. You know, you're a little bit more stable than somebody who just was walking down the street, has a low score, and had some hiccups. Not saying that you can't get that property, but the bank will treat you a little bit different. Now, here's one key that I want to tell you that is really going to help you a lot. You know, I said, you know, go to your local bank and that sort of thing, and that local bank may or may not be able to help you, but I'm going to tell you this. This is what I see. It may not be what you want to hear, but it's the truth. You want to go to a successful real estate agent, one that does, you know, tons of deals. Why? Because they're dealing with the lenders that actually get deals done, that actually know what they're doing, that have the skill level to help you through all kinds of different things, and it's going to have the least amount of aggravation for you. Applying for a loan, you're going to have to fill out lots of paperwork. You're going to have to give the bank a lot of stuff like your tax records. They're going to dig, you know, they want to make sure and feel comfortable with you. But this is one of those things where if you're dealing with a real estate agent who's game on, they're going to point you in the right direction. You're going to have less hiccups. The deal is going to go much smoother. You're probably going to get a better rate. And like our team members, you know, we do thousands of deals. We've helped thousands of people buy and sell real estate here. So when you're dealing with one of our team members, they're going to point you in the right direction with what to look for, you know, what bank to look for, what to stay away from. And I'm not naming any names, but I am going to say this. The banks, a lot of the national banks are not that friendly. A lot of people say, I got money in the bank of blah, blah, blah. And, you know, I deal with them and I've got a great relationship with them. That's your hometown bank. Now, when you start dealing with something, you tell them, look, I'm going to be dealing with this out of state. Oh, yeah, we can do that. And the fact is maybe they can, but I'm going to tell you what ends up happening is you end up getting sloughed off to somebody else in another state. And then that problem is where the ball gets dropped. And those are the problems where I see, and then they come running, wah, wah, wah. Gerry, help me out. You know, somebody on our team here, help me out because, you know, this deal fell apart. Can you help me? Don't start there. Call the real estate agents that's got the people that they deal with on the daily, every day that they're dealing with, and they're closing multiples a month. These are the people that are going to give you the accurate information and going to get you from a lot of aggravation. So I really hope this information helped. Did it help is the question, so go ahead and comment below if it did. I've got a little infographic here in this video I'm going to include as well. It tells you about pre-approval and why it's important that you should get a pre-approval. And guys, I know, you know, you've been on the internet and not all the stuff on the internet is true, not all of it's accurate. But, you know, when you pick up the phone and you give us a call, when you actually meet with our team here in our office, you are going to find out so much information. You know, the internet will get you started. It's not going to answer all the questions. And I say this over and over, but you guys, I hope you're enjoying the videos because really, honestly, that's what it's all about. I want to make sure we're helping you. I mean, this is what we do. We help people. That's all I want to do is help more people. So if this was helpful, like I say, really don't take it to the next step. If you're serious, take it to the next step. Just set up an appointment. We'll sit down and talk. We're not selling you anything. We just kind of give you the information, and then you can make a smart decision and see, you know, was this something I want to do or not do? Can it work for me or not work for me? And, you know, by the end of the day, you're going to know what's average. You're going to know what's way above average. And if you decide to buy, that's great. If you decide not to buy, that's fine. We're still friends. I just want you to know that, seriously, here to help you. So anyway, just go ahead and let me know what you think about all this and watch their video. And if you haven't done so already, go ahead and click subscribe because, again, we got new videos that come out every single week. Hope you're having a great day. We'll talk to you soon.